Yes, students, come to ICI material now. We'll discuss the questions from ICI material. Test your knowledge. First set of questions is multiple choice questions. First one, generally, for the purpose of cost sheet preparation, costs are classified on the basis of functions, variability, relevance, nature. It is functions. Okay. Which of the following does not form part of prime cost? Cost of packing, cost of transportation paid to bring materials to factory? Yes, sir. It is a part of direct material cost. Next, GST paid on raw material, credit not available. Will we include it? Yes. Overtime premium paid to workers. It depends on the purpose, but now can we consider it as a part of wages sometimes? Yes. Depends on the purpose. Why we have want. Clear? Huh? But out of the given, which one will not form part of prime cost? Cost of factory. It depends whether it is primary or secondary. Even if it is primary, it is a separate line item. After works cost. After works cost. So is it a part of prime cost? No, sir. Yes. So I can consider this also, but it depends on the reason why we have worked overtime. But out of the given, which is not a part of prime cost at all, means it is cost of packing guys. Third, A Limited received an order for which it purchased a special frame for manufacturing it. It is a part of direct material, direct expenses, factory overheads, indirect administrative overheads. Right. Direct material or direct expense. See, you will get confused in between this. Direct material and direct expenses. Sir, what is it first of all? Direct expenses. Why? Guys, it is not a basic raw material. If it was a basic raw material from which I will manufacture my output, it is always direct material. It is something special it seems, for which it is purchased. It received an order for which it purchased a special frame. So it is direct, but expenses, not direct material guys. Clear? Means it is not a basic raw material. That is why we are not considering it as direct materials, but direct expenses. Okay, because students might have confusion between direct material and direct expenses. That is why I just explained it. Next, salary paid. Salary paid to plant supervisor is a part of factory overhead. Where will be the plant? Plant is nothing but manufacturing plant. Okay, which is nothing but factory. Chetan Kumar, paying attention? Fifth one, depreciation of director's laptop is treated as part of, assuming director's laptop is used for business, it is a part of what? Anything you pay to director, administrative. Now depreciation on not director, depreciation on director laptop is also a part of administrative overheads. A manufacturer has set up, manufacturer it should be, okay. A manufacturer has set up a lab for testing of products for compliance with standards. So can I consider as quality control? Yes. Salary of this lab staff are a part of quality control costs. The other option is works overheads, direct expenses, research and development. This is not research and development. Okay, na? Yes. Testing is nothing but quality control testing. Audit fee paid to auditor is a part of administration cost. Salary paid to factory store staff is a part of factory production, direct employee cost, direct material cost. See, once you add factory overhead, you will get cost of production. Works cost to annual cost of production. But please be careful, what is more suitable here? Factory. Correct. Because when I add factory overhead, we will get works cost. After that, if you add few things, you will get cost of production. Sir, will factory overhead be a part of cost of production? Yes. If this option is not there, maybe I would have choose production cost. Clear? But factory is there. So this is your first choice there. Factory. Oh. Canteen expenses for factory workers are a part of factory overhead, administrative cost, marketing cost, none of the above. Factory overhead. 10th one. A company pays royalty to state government on the basis of production. For each and every unit you produce, they are paying royalties. It is treated as direct material cost, factory overhead, direct expenses, administrative cost. direct expenses. When you are paying royalty for each and every unit produced or based on number of units produced, we call it as direct expenses. Done with MCQ. Done with MCQ. Come to the practical. Come to the practical. Guys, first question we already dealt with. Okay, I have taken this question in my question bank. We already done with this. Correct, huh? Good. Second one. From the following particulars, you are required to prepare monthly cost sheet of Aditya Industries. Opening inventory, obviously data will be given for a month. If it's for other period and all, they will tell per year and all. If nothing is mentioned, it is understood it's per month. Opening inventory of raw material, 12 lakh. Work in progress, 18 lakh. Finished goods, 10,000 unit systems, 9 lakh 60,000. Closing inventory, that is closing stock of raw material, 14 lakh. Work in progress, 6 lakh, 16 lakh, 4,000. Finished goods, question mark. Finished goods, question mark. Raw material purchase, 1 crore 44 lakh. GST paid on raw material purchase, ITC available. Should we add it? No. ITC available. See, sir, where did you teach it? In this chapter, no, we already dealt it in material chapter. Same thing, I told you sometimes connections would be there. No, sir, material chapter I have skipped. Hey, Rohit, material chapter attend madidya. Chalo. So, this is what happens when you miss 1 or 2 classes, connections would be there. When the connections are given, you will be lost. Wages paid to production workers, direct wages. Okay, expenses paid for utilities. Utilities means like electricity, water, anything like that. Okay, 1,45,600. Office and administration expenses, 26 lakh 52,000. Traveling allowance paid to office staff, administrative overhead. General or production? General. Good. 1,21,000. Selling expenses, 6,46,000. Machine hours worked, 21,600. Machine hour rate, 8 per hour. Factory overhead absorption pattern they have given. Okay. Units sold, 1,60,000. Units produced, 194. Desired profit is 15% of sale. Guys, if I ask you what is the closing stock of finished goods, calculate and tell me quickly. Closing stock of units. Closing stock of finished goods in units I am asking. Closing stock of finished goods in units. In units. Guys, they have given opening stock. How much? I guess 10,000 now. Yeah, 10,000. Plus we have produced 1,94,000. How much is available for sale? 2,04,000. How much we have sold? 1,60,000. Some people told 34. They didn't consider opening stock, I guess. Clear, huh? Opening stock where is got here. So 44,000 is what? Closing stock of finished goods. Guys, if nothing is mentioned, you always follow P4. So this 44,000 is out of what? Current year production. Current month year, not year, month production. Okay, so let us go to the solution. Hope you understood. Yeah. Cost sheet of Aditya Industries for the month of dash. I think the month is mentioned, I guess, na? Month is mentioned, huh? Which month? That's all. Okay, that is why they have put dash. If name is given for the month, you add. Units produced 194, units sold 160. Raw material purchase price 1 crore 44 lakh. Opening value of raw material, closing stock of raw material is given, adjusted. What do you get? Raw material consumed. Per unit also is calculated. 73.19. Sir, how did we derive it? 1 crore 42 lakh is for the units produced or sold? Produced. How many units we have produced? 194. So 1 crore 42 lakh divided by 194. Are you getting 73.19? Please be careful, guys. There are chances that you may mistakenly take in between this. till the point we get cost of production, it should be units produced. After we get cost of goods sold, it is for units sold. Okay, sir. Wages paid to production workers, obviously direct wages. If you want, you can write direct wages. 36,64,000 divided by 1,94,000. 18.89. Expenses paid for utility. It is considered as direct expenses. Direct expenses. Clear? Sir, can I consider as factory overhead also? Yes, give a note for it. Better here also give a note. Telling expenses paid for utilities is considered to be other direct expenses. Sir, can I take it as factory overhead also? Yes. Because sometimes they give power, heat, light and all there. Correct? So can I consider it as factory overhead? Yes. Here, for this question, they have taken it as direct expenses. If you ask me what is better, sir, better to take it as factory overheads. Better to take it as factory overheads. There is nothing wrong if you take here, but mention clearly as a note. As a note. Oh. 1,45,600 divided by 1,94,000. Are you getting 0.75? Yes, just add it up. You will get prime cost. Factory overhead amount is not given. Factory overhead amount is not given, but pattern is given. Bottom you see. Hours is given, rate, machine hour rate is given. Multiply both. 21,600 into 8. 1,72,800. After seeing this, I got connected to this now. Why they have taken this as direct answer? Because factory absorption pattern they have given, and separately they have mentioned expenses paid for utilities. That means, can I consider this is not a part of factory? Can I consider it is not a part of factory? Yes, that is why they have taken it as direct expenses. Clear? Hope you understood the reason for treatment here. Okay. Opening WAP, closing WAP, add and deduct. You will get cost of production 1 crore 83 lakh 78,400 divided by 1 lakh 94,000. Guys, if you want, you better show here 1 crore 83 lakh 78,400 divided by 1 lakh 94,000 divided by 1 lakh 94,000. Next, value of opening stock is already given 10,000 units, 960. Is it given in the question itself? Yes, it is given, guys. But this is interesting. This is interesting. We need to calculate. Value of closing stock. Guys, 44,000, how they have got? Have they shown? No, better you show. Okay, somewhere on the top you read. Okay, opening stock plus production minus closing stock is equal to sales. Except closing stock, all other things we know, calculate equation. Tell me sales 1 lakh 10,000 1 lakh 94 minus closing stock is equal to sales 1 lakh 60. 1 lakh 60. So closing stock units, closing stock of finished goods in units terms. How much is that? 44,000. Show it. They are not shown. Guys, anything you get which is not given in the question, please show how you derived it. Please show how you derived it. This is the closing stock of finished goods in units. In units. Now, can we calculate the value? Yes, we already have. What is the cost of production? We already have cost of production. Just take into 94.7 into 94.73. Which method we have followed here? FIFO. Give a note for that also. As nothing is mentioned in the question, follow FIFO and give a note for it. Give a note for it. Hope you understood. Clear? FIFO method is followed for inventory. For inventory of finished goods. That also you can mention to be very clear. Got it? Guys, assume. Listen. Assume they themselves are given weighted average is followed. Weighted average is followed. What do you calculate? First, weighted average price. How is it, sir? Add up the cost, including opening stock, divided by total units, 2,04,000. What do you get? Weighted average price. Hope you understood. Okay, the answer is only either FIFO or weighted average. If question is relevant, always follow FIFO. If by chance if they only give weighted average, can you calculate weighted average price? Yes. How is it? Add up both of this, including opening stock. Divide it by total units. What is the units available for sale? 194 plus 10, 24. That is 204. Hope you understood. Yeah. Here it is not asked. If at all if they ask, what do you do? Okay, sir. We got cost of goods sold. Guys, cost of goods sold. Now I have to divide it by how many units? 1 crore 51 lakh 70,280 divided by 160. 1 lakh 60,000. 94.81. Yes, guys, here if you do 194 Gano. Clear? Because you have adjusted opening and closing stock. Now this is for how many units? Hello? This is for how many units? 1,60,000 units. Not for 194. It is for 1,60,000 units. Not for 194. Okay, sir. Next, office and administration expenses paid, guys. 26 lakh 52,000, which is considered to be. ಏನೋ ಮಾಡ್ತಾ ಇದ್ರಿ ಇಷ್ಟ ತನಕ ಯಾರು ಕೊಡ್ತಾರ ಅವ್ರು ಕೊಡ್ತಾರಾ you should pass on na as and when you guys do please pass on office and administrative expenses paid 26 lakh 52,000 divided by how many units? We already crossed COGS. Now anything after COGS should be for cost units sold which is for 1,60,000. So 26 lakh 52,000 divided by 1,60,000. 16.58. Next, traveling allowance paid to office staff 121. Office staff again part of office only. So divide it by 160. Sir, can I club this both and write one figure? Yes. Maybe you will show somewhere as a note or working note. Bring the main answer. Administrative overhead bracket general. Okay, sir. Now selling expenses. 6,46,000 given directly in the question. Nothing competition. Only per unit we have to calculate. 6,46,000 divided by number of units. How much is the number of units? 1,60,000. 1,60,000. 4.04. 4.04. Okay, guys. At least for this you show per unit calculation. How did you get it? 151, 70 to 80 divided by 1,60,000 units. 1,60,000 units. Okay, so cost of sales we have got. Cost of sales. Here ಮತ್ತೆ per unit calculate ಮಾಡೋ ಅವಶ್ಯಕತೆ ಇಲ್ಲ. You can just add it up. No sir, I want to calculate per unit. Fine. You can cross check whether it is matching or not. Yeah, and one more thing guys, when you're doing like this for opening stock, closing stock, don't give any effect here. If you minus there, then you will get zero later. Don't write per unit for opening stocks and closing stocks. Yeah, cost of sales we got, profit. Sales is given or profit is given. Just a minute. Let me go back and see. Okay, profit is given. 15% on sales. That means how much percentage on cost? 15% on sales, guys. They are not shown that also. See, if you don't show, you will lose marks. Please be careful. Don't assume, anyway not shown now, so I will also not show that. Profit in bantu anta they have not shown. Clear? Now let us show that also. Yelli jaga yelli we will find a place. Okay, here. 15% on sales. So let me assume sales as 100. So cost plus profit is equal to sales of, yes, if I write it as an equation. Cost I don't know. Sales. Okay, let me write it below only better. Sales is 100. So profit is 15. Cost is 85. So profit percentage on cost is equal to 15 by 85. Keep as it is. 15 by 85. Got it? Yes. Please take down. It is not given. Okay, 15 by 85. Okay, sir. Now, how do we derive the profit? Cost is given. Per unit we will calculate a total. Better total only. Okay. 1,85,000. 89,280 into 15 by 85. 32,80,461 divided by 1,60,000. divided by 1,60,000. Or else you can do like this also. 116.18 into 15 by 85. You will get same. You will get same. Now add up both, you will get sales. Sales also not written. Please write it. Sales. Sales. Got it? Now you can also cross check your answer. You do 2 crore 18,69,741 into 15%. Are you getting the same profit? You check. Getting it? Yes. Done. Yes. Take down this part, guys. Sales. Sales is assumed. This is assumed. As profit percentage is given on sales, we have assumed sales to be 100. So we have written the equation. Cost plus profit is equal to sales. So if sales is 100, profit would be 15. Sir, how sir? 100 into 15%. 15. Now cost is balancing figure. 100 minus 15. Cost 85. So profit percentage on cost is 15 by 85. All this tuck, you should be able to do in the exam. Don't waste too much time on this. Clear? Now why 85, sir? Any other number also? Sorry, why 100? Can we assume any other number? Yes. Make it easy. Okay, better 100 or like 10 or even if it is 1 also okay. Clear? But don't take odd numbers and all. Then unnecessarily confusion for you only. Odd numbers in the sense fancy numbers I am talking about. Sir, nanige 6 ishta, 7 ishta, nanige some jersey number. Sir, 7 is my favorite number, 9 is my favorite number, Virat Kohli 18 is my favorite number. I will take Veda. Okay? Yes. Done with this. Done with this. Come back to questions. A limited company has capacity to produce 1 lakh units of a product every month. Its works cost at varying level of production is as under. Similar question we did it under additional, but there it was prime cost. There it was prime cost. But what is given here is works cost, factory cost. Works cost on factory cost. At different level is given us. Okay. If I operate at 100%, what would be my works cost per unit? And 310. If I operate at 50%, 360. 20%, 390. I just read few. Okay, don't feel bad about sir. Why didn't you read other percentage and the time? Chalo. Well, proceed. Understood, na? As the capacity production increases, per unit it is coming down. Per unit it is coming down. Okay. However, they are given. We have learned, sir, variable cost per unit will remain same. Yes, it will not change. But here, maybe due to some reason, on the addition question only something they are given at the bottom. Why it is coming down and all? Yes. Here put it. Okay, no, it is not given. Oh, fine, that's fine. Okay, reason and all, you don't go for it. Here, yes, sure. Its fixed administrative expenses amounting to 1,50,000 and fixed marketing expenses amounts to 2,50,000 per month respectively. Both are fixed. Both are fixed. The variable distribution cost amounts to 30 rupees per unit. Okay, distribution and the unit sold. It should be on unit sold. It can sell 100% of its output at 500 rupees per unit, provided it incurs the following further expenditure. Copy paste of those things which was given. But numbers will not be same for sure. It gives gift item costing 30 per unit of sale. Okay. 100% means how many units will be there? 1 lakh. For each and every unit, how much? 30 rupees. Per unit, not per dozen, no. It has lucky draws every month, giving the first prize of 50,000, second prize of 25,000, third prize of 10,000, and 3 consolidation prizes of 5,000 each to customers buying the product. So if I ask you to calculate total, how much guys? 50 plus 25 plus 10 plus 5,000 into 3. 5,000 into 3. Okay, sir. It spends 1 lakh on refreshment served every month to its customer. Refreshment, you know now, whenever you go to a showroom, okay, they will give you papa, whether you buy it or not, at least water and some snacks they will give. Correct, huh? Especially when you go to car showroom and all, you have seen, sir, would you like to have coffee, tea, or water, or some snacks also? Some people give snacks also. Clear? Some people go to the showrooms to have this and come back also. ಎಲ್ಲ ಕಡೆ ಇನ್ಕ್ವೈರಿ ಮಾಡಿ ಎಲ್ಲೂ ತಗೊಳ್ಳಿ It sponsors a television program every week at a cost of 20 lakh per month. So one more story. Okay, connected to this. Now most of my friends are getting married now, or few months back also few of them got married. ಅವ್ರಿಗೆಲ್ಲ free. Whenever they go for searching, hunting, okay, sir, they will give na ಓದೋಕೆ coffee, tea, snacks, breakfast, ತಿಂಡಿ ಎಲ್ಲ. Okay, he is lucky. They're lucky. Why, sir? They will see number of people. Everything they get every home different taste. ಯಾರ ಮನೆ ಟೇಸ್ಟ್ ಚೆನ್ನಾಗಿರುತ್ತೋ ಸೆಲೆಕ್ಷನ್. ಅಲ್ಲಿ ಕುಕ್ ಮಾಡಿರೋದು ಹುಡುಗಿ ಅಲ್ಲ, ಅವ್ರ ಅಮ್ಮ ಅನ್ನೋದು ಗೊತ್ತಿರಲ್ಲ ಅವ್ರಿಗೆ. ಚಲೋ. I didn't give such attention to my parents. Very simple. Chalo. Don't worry, why and it can market 30% of its television ಹೋಯ್ತಲ್ಲ ಇಲ್ಲ ಅದೊಂದು ಓದ್ಬೇಡ. It sponsors a television program every week at a cost of 20 lakh per month. It can market 30% of its output at 550 per unit without incurring any of the expenses referred to in A to TB. Sorry, A to T above. Okay. Means, guys, they are giving you one more pattern. In our question, January, February story was there. But here, not January, February story. They are giving you two options. If you produce and sell 100%, then this is the additional cost you have to incur. And what would be the works cost? 310 per unit. But you have one more option. What is it? 30% of the output you will produce. And you will sell it at 550. But none of these expenses will come. Others will be there. Okay. Sir, works cost will it be there? 30% now? 380. Plus this also will come. All this would be there. Only this extra cost will not be there. Okay. And selling price also will vary. 550. Okay. How come it is more, sir? Guys, when you are selling less units, obviously you will command the price. When you want to sell more, obviously they will offer some discount and all. Clear? So obviously that is why the selling price is kept lower at 100%. Prepare a cost sheet for the month showing total cost and profit at 30% and 100% capacity level. Both the capacity levels they have asked. So at 30%, what will be the units? 30,000. At 100%, 1 lakh. Correct? Because it is given here. Na? It has a capacity to produce 1 lakh means at 100% capacity, how many units they will be producing and selling? 1 lakh. 30%, 30,000. No opening, no closing stock. Very easy. Let me erase it here, which I had written for previous question. Yes, guys. Two options we have 30%, 100%. 30,000 units, 1 lakh units. Okay, sir. Per unit, works cost 380, 310. It is already given in the table, question 380, 310. Multiply. 380 into 30,000, 1 crore 14 lakh. 310 into 1 lakh, it will be 3 crore 10 lakh. 3 crore 10. Per unit is less, but number of units when you multiply, it will go up. Okay, sir. Fixed administrative, as it is already works cost. Okay, straight away we are going with administration, which is considered to be general. Okay, they are not presented cost of production and all straight away. Okay, sir, can I take this itself as cost of production, sir? Works cost itself as COP? Yes, that itself is a COP. Oh, fixed administrative expenses 150, 150 fixed to total load. Per unit can we calculate? Yes. 1 lakh 50 divided by 30,000. 1 lakh 50 divided by 1 lakh. As the number of units increases, fixed cost per unit will decrease. Decrease. You can observe. ಇಲ್ಲಿ per unit fixed ಇಲ್ಲ, total is fixed. If you divide it by number of units, you will get per unit. Fixed marketing expenses 2 lakh 50, 2 lakh 50 per month fixed, irrespective of how many units you produce. Now divided by number of units. 2 lakh 50 divided by 30,000. 8.33. Here 2 lakh 50 divided by 1 lakh. 2.50. Variable distribution cost per unit is given. Per unit is given. Guys, please be careful. Few things are given in total, few things are given per unit. It is variable in nature. Variable in nature. So 30 per unit. So for first, we will multiply 30 with 30,000. Here we will multiply 30 with 1 lakh. We will get 9 lakh and 30 lakh. Okay, sir. Now coming to special cost, only for 1 lakh component. Whereas here it is not there. Here it is not there. Okay. One by special items cost. First you take total. 30 lakh. Customer prices 1 lakh. How is it, sir? First price 50,000, second price 25,000, third price 10,000, consolidation prices 5,000 each for 3, 15,000. Total comes to 1 lakh. Okay, sir. Next, refreshment 1 lakh. Television program sponsorship cost 20 lakh. Now divide each of this by 1 lakh. 30 lakh by 1 lakh, 30 rupees. 1 lakh by 1 lakh, 1 rupee. It is also same. Here, 20 lakh divided by 1 lakh, 20. Better first take all the total, then divide it by 1 lakh. Gift items? Per unit, total total. Okay, fine. They have given per unit itself here. So this is 30 into 1 lakh. Into 1 lakh. Yeah, first sentence was that only. 30 rupees per unit. Per unit. So 30 into 1 lakh. Whereas others are given total divided by 1 lakh. Divided by 1 lakh. Okay. Now come to sales. Cost of sales we have got it, sir. Sales have they given? Yes. Per unit they have given. Per unit is given. Correct? When 30% it is 550. Last part of the question. Whereas 100% means 500. Now multiply. 550 with what is the number of units sold? 30,000. This comes to 1 crore 65 lakhs. Here 500 into 1 lakh, which comes to 5 crore. Which comes to 5 crores. Okay, so 5 crores. Fine. Now coming to profit. Deduct each other. Okay, balancing figure. 550 minus 423.33. 126.67. 500 minus 396. 104. Multiply with the units, you will get total profits. Or else you can deduct each other here. You will find the profits. Clear? Yes. Sure. We'll move forward. Question number 4. Come to fourth question. The following figures are extracted from the trial balance of GK Company on 31st March. Inventories, finished stock, opening. Guys, what is given in the trial balance will always be opening. If it is closing, somewhere in the adjustments they would have given like this. Okay, anything given in trial balance with respect to inventory, consider it as what? Opening stock. Oh. Inventories. So you can write this are opening stock. Finished stock 80,000, raw material 140, work in progress 2 lakh. Okay. Office appliances 17,400. Expenses, all these are expenses. Plant and machinery 4 lakh 6,500. Building 2 lakh. Building is not an expense, so asset though. Asset will also have debit balance. So maybe somewhere they would have given some depreciation on building in the adjustment. We will check it. Yeah, building is not expenses. It is an asset. Sales 768. Returns 14,000. You can net adjust. That is net sales. 768 minus 14. Material purchase 3,20,000. Freight incurred on material. Should we add it? Yes, we should add it. 320 plus 16. Purchase returns also is there. You have to deduct 4,800. Direct employee cost 1,60,000. Indirect employee cost factory overhead 18. Factory supervision 10. Repairs and factory upkeeping of expenses 14,000. Eat, light and power 65. Guys, see if nothing is mentioned, assume it to be factory. But sometimes they will give you the ratio. How do you divide it between factory, office, and selling and distribution? If they give like that, take it. See, sometimes, listen guys. Machinery also might be there, or plant. On that, depreciation would have been given. But they have not given any ratio of apportionment. You will take depreciation on machinery or plant where? Under factory. Because why? Simple logic. Sir, plant or machinery will be used in factory. Clear? Sometimes they will give like this. Depreciation on office furniture. Name itself is telling. Take it to office and administrative overhead. Okay. Next. Depreciation on office building. Office straight away. Sir, depreciation on marketing furnitures or marketing department furniture. Take it under marketing. That is selling and distribution. Selling and distribution. Did you guys get it? Yes. Rates and taxes, no clarity. Miscellaneous factory expenses, factory. Salesman's commission, sales traveling, sales promoter, everything selling over it. Distribution department salaries and expenses, distribution. Office salaries and expenses, administration. Interest on borrowed funds, 2000. We have to choice for it. We have a choice for it. Okay. Better treat it as pure financial item. Don't include it in cost of sales tax. Further details are available as follows. Finished goods 1,15,000. Raw material 180. Work in progress 192. Guys, what is this? Closing inventory. They have only given a proper. Outstanding expenses on direct employee cost 8,000. Indirect employee cost 1,200. Interest on borrowed funds 2,000. What should we do with this? Add outstanding expenses, single entry system. Okay, now one more chapter, non-profit entity. NPO, NTO. Clear, there you would have been master of this. Add less. Correct? What to add? Opening outstanding, closing outstanding, prepaid, opening, closing. Sorry, you ask us anything, I will tell. Tak. Yeah, yes. Guys, this is something which is incurred but not paid. Incurred but not paid. Will it be included here? No. So what should we do now? Should we record it? Yes. Because costing, we are not maintaining it on cash basis. We are maintaining it on accrual basis. Should we add it, sir? Yes. As we have incurred it, liability is created. Add it. In financial records and all, where do you show this outstanding? As a liability in the balance sheet. Even in P&L account, you will add this. Clear? For whatever paid figure is there, you will add outstanding, but I am not paid. My cash balance has not come down. How will you match this now? With liability. With liability. Okay. Depreciation to be provided on office appliances 5%, plant and machinery 10%, buildings 4%. Distribution of the following costs. They have given some ratio. Heat, light, and power to factory, office, and distribution in the ratio 8:1:1. Rates and taxes 2/3 to factory, 1/3 to office. That's all. Only two proportions. Depreciation on building to factory, office, and selling in the ratio 8:1:1. Sir, what about plant and machinery? Office appliances, they are not given. Depreciation on plant and machinery, fully factory. Office appliance, name itself is telling. Completely administration. General or related to production? General. Put it under general. Clear? Yes. With the help of the above information, you are required to prepare a condensed profit and loss statement. This is nothing but cash sheet. Oh. Statement is asked, not account. If it is account, you will have debit side, credit side and all. Yeah. So here we are not doing account, we are doing statement. Of GK company for the year ended 31st March along with supporting schedules of cost of sales, selling and distribution expenses, administrative expenses. Means you need to prepare a separate working part for all this thing. Yes. So, top to bottom, majority of the things they have covered in this question. Okay, let us start with the schedule first. Schedule. Raw material, opening stock, 1,40,000. Material purchased during the period, 320, given the trial balance. Freight, 16,000. Debit side. Both of this debit side. Then on the credit side, returns is there. Can you adjust it here? Yes, you have to adjust. 4,800. What is the raw material consumed? 3,31,200. Better draw a line there. Here. 3,31,200. 4 lakh? Hey, you Ishmatra Kano. Oh, plus, see, they have taken 140. Okay. Better they would have mentioned it here only. That is why confusion. Okay. Yeah. So, fine. They have taken it outer only. Let us continue with the thing. Sir, opening they have treated separately, guys. This they have adjusted. 320 plus 16, 336 minus 4,800. Net is 331. If you ask me, material consumed is how much? 471,200. 471,200. Better they would have put it here, and raw material consumed directly they can take it in the outer column. Little confusion there. That's fine. Hope you understood. What we have calculated here, 331, 200 is not raw material consumed. I need to add it with opening stock. Only then I will get raw material consumed. Okay, sir. Oh, closing stock is here. Oh, yes, yes. Closing stock also is not taken care. Actually, raw material consumed will come here. Sorry. Raw material consumed will come here, which is 291,200. Okay, little mess up there. Better you do everything. This also, you put it in the inner column. This also, you put it in the inner column. Final figure, this you better take it to the outer column. Or else maybe do it by way of note or working note and then bring it here. Oh. Direct employee cost. 1,60,000 is given in trial balance plus outstanding is how much? 8,000. So this is outstanding. Not opening stock. Outstanding. 8,000. So we'll get prime cost 4,59,200. Don't close here because it will continue. It should be closed here to total. Or keep the amount column open because we will keep on adding. Factory overheads, everything they have taken in the inner column. Indirect employee cost 18,000 plus outstanding given in the adjustments 1,200. Next, factory supervision, repairs and factory upkeeping expenses. Heat, light and power is 65,000, but 8:1:1 is the ratio. So here you have to take 8 by 10. 8 by 10. Rates and taxes total is 6,300, but only 2/3 is for factory. Remaining 1/3 is for office. Miscellaneous factory expenses 18,700. Depreciation on plant fully taken here. 4,60,500 is the asset value into 10% is the depreciation. Next, depreciation of building 4%. Asset value is 2 lakh. 4% is the depreciation rate, but only 8 by 10. 8:1:1 is the ratio. Yes. So you have to take 8 by 10. Okay, sir. 6,400. So what is the total factory overhead? 1,70,550. So gross works cost is 6,29,750. Add opening WAP and deduct closing WAP. What do you get? Net works cost or cost of production. One and the same. You can write net works cost or cost of production. One and the same here. Okay, so then add opening stock of finished goods and deduct closing stock of finished goods. What do you get? Cost of goods sold 6,02,750. For administrative expenses and selling, they have asked me to do schedule specifically. We will do it. Schedule of selling and distribution expenses, salesman's commission, sales traveling, sales promotion. Purely name itself is telling where it has to go. Distribution department also we are taking because distribution is taken care here itself. Okay, heat, light and power. I think 1/10, 65,000 into 1 by 10. Show it. 1 by 10. Depreciation 2 lakh is asset value, right? Into 4% into 1 by 10. 1 by 10 only, right? Yes. Here it is 8 by 10. Ratio is 8:1:1, right? Oh, 800. So 90 to 400. Bring it to the main answer. 90 to 400. Next, schedule of administrative expenses. Assumed to be general, guys. It is assumed to be general fully. Assumed it to be general. Office salary and expenses 8,600 directly given. Depreciation on office appliances. Guys, what is the asset value? Office appliances. Show the calculation. Huh? Tell now quickly. Office appliances asset value in the trial balance debit side. Huh? 17,400. Depreciation rate. Last adjustment. 5%. Straight away full year only. Full year itself. 870. Yes. Depreciation on building. Show the value. 2 lakh into 4% into 1 by 10. 800. Heat, light and power 65,000 into 1 by 10. Rates and taxes 6,300. 6,300 into 1 by 3 into 1 by 3, which comes to 2,100. So this is our total administrative expenses, guys. Bring it to the main calculation. Bring it to the main calculation. We got cost of sales. Yes. Did we include interest cost here? No. So that is why they have mentioned excluding interest on borrowed funds. 7,14,020 guys. Now get it here. Get it here. Okay. Gross sales minus sales returns and rebates. You will get actual sales or net sales. From that we are reducing cost of sales. Better you write 7,54 in the next line. Okay, fine. Because it may confuse you. Cost of sales is 7,14,20, which just now we derived, excluding interest. Now what we got? Operating profit. 39,980. From that, they are reducing interest as they have given. Once extra step also they are showing. Okay. Interest 2 plus 2. Why is that 2 plus 2? In trial balance 2000 is given, which is paid. Another 2000 is outstanding, which is given in adjustments. So 4000 is taken. We derived what? Net profit. Clear? In FM also you do this calculation. Operating profit we call it as PBIT or EBIT. PBIT or EBIT. PBIT means profit before interest and taxes. Whereas EBIT means earnings before interest and taxes. Clear? Yes. This calculations and all, whatever I just now told EBIT, PBIT and all, only for FM, not for casting. Not for casting. Sir, here you took some tax before and all. Yes, you give it the same adjustment, however they are told. Because taxes was there somewhere. Correct? Taxes here, rates and taxes. We have divided between factory and administration. Don't worry about that and all. Because after studying FM, you might get doubt here. Sorry, you have taken it before EBIT and all. However, they had given it in the question, we have dealt it. We have dealt it. Okay. Whereas in FM, you will take it after operating profit. Okay, that is after operating profit, you will reduce interest. You will get earnings before tax. From there, you will reduce tax. If you have not yet learnt FM, don't worry about what I told. Okay, leave it. You will learn there. Oh, that's all, guys. That's all. 35,980. Got it, no? Yes. Sure. We're done with all the practical questions, I guess. We have one case scenario. Case. Let us solve the case now. M Limited is producing a single product and may expand into product diversification in next 1 to 2 years. M Limited is amongst a labor-intensive company where majority of the processes are done manually. Employee cost is major cost element in total cost of the company. Okay. The company conventionally uses performance parameters, that is earning per man shift, to measure cost paid to an employee for a shift of 8 hours and output per man shift to measure an employee's output in a shift of 8 hours. So in a shift, how many hours is the working time? 8 hours. Oh. The chief executive finance of the has emailed you few information related to last month. No need to check your mail. Here only it is there. The email contains the following data related to the last month. So the data is given for a month, guys. During the last month, the company has produced 2,34,000 tons of output. Expenditure are as follows for a month. Raw material consumed 50 lakh. Power consumed 13,000 kilowatt hours at 8 rupees per kilowatt hour. Multiply to run the machines for a production. Diesel consumed 2000 liters at 95 rupees per liter. Again multiply. To run power generator used as alternative or backup for power cuts. Wages and salaries paid 6 crore 40 lakh. Gratuity and leave encashment paid 64 lakh 20,000. Both paid to workers only. Hiring charges paid for HEMM 30 lakh. 30 lakh. HEMM are directly used in production, guys. This is like heavy earth moving machines, guys. Clear? Which is used in the field of construction or maybe mining. Maybe mining in simple. Know that as a machine. This machine is used in production. Hiring charges paid for cars used for official purpose, 66,000. Office administration. Okay. Reimbursement of diesel cost for the cars, 22,000. Office, again office. The hiring of cars attract GST under RCM at 5% without credit. Again my area. Ah. Now listen. Guys, this is covered in the RCM list. Correct, huh? Renting of motor vehicle, covered, huh? There is an option. If supplier has not paid tax at 12%, then recipient has to pay tax at 5%. Under what? RCM. And they are telling clearly here, no credit. Now on my inward supply, if I have paid GST and if credit is not available, is it a part of my cost? Yes, it is a part of my cost. It is a part of my cost. Now what is my cost here? 66 plus 22 plus 5% off. Plus 5% of it. Because it is an inward supply, I have paid a tax under RCM as a recipient, for which there is no credit. Guys, see, actually, sir, whether forward charge or reverse charge, recipient can enjoy the credit actually. If it is a forward charge, supplier is the one who is liable to pay, but from whom will he collect? Recipient. Can recipient claim the credit of it? Yes. Now, if it is RCM, who has the responsibility to pay? Recipient. He paid it by himself. Can he claim the credit? Yes. Both ways, is he eligible to claim the credit? Yes. But here clearly they told credit is not available. So should we add it to our cost? Yes, guys. Maintenance cost paid for weighing bridge used for weighing of final goods at the time of distribution 12,000. AMC cost, annual maintenance cost, or CCTV installed at weighing bridge used for weighing of final goods at the time of dispatch, again distribution, at the time of distribution. And factory premises is 8,000 and 18,000 per month respectively. Okay, it is incurred for office also, factory also. Please be careful. 8,000 is per office, in the sense at the time of dispatch 8,000, whereas in factory it is 18,000. Okay. TADA andre ಏನು? Traveling allowance, dearness allowance. Your employer is treating you as a tier 1, so is giving dearness allowance. And total bill paid for sales manager, 36,000. Selling over. The company has 1,800 employees, works for 26 days in a month. Each day 8 hours. Okay. You are asked to calculate what and all. What is the amount of prime cost? Okay. What is the total and per shift cost of production for last month? Okay. What is the value of administrative cost? Okay. What is the value of selling and distribution cost and total cost of sales? Next, what is the value of earnings per man shift and output per man shift for the last month, guys? Okay, let us determine one by one. Okay. So they have done one full calculation, guys, like cost sheet they have drafted, so that anything from here we can pick it under. So material consumed 50 lakh is given. Yes. Wages and salary 6 crore 40 plus gratuity and leave encashment, both paid for workers, so added together, which comes to total 7 crore 4 lakh 20,000. Power cost 13,000 kilowatt hour into rupees 8 per kilometer. Diesel cost 2,000 liter, which is used for production. That is why they have taken it here itself as direct expenses, guys. 93, 1,86,000, 290. Then HEMM hiring charges, that is also used for production. I guess they have given like that. So that is why, as it is used, as the higher charges depends on the number of units produced, we are considering it as other direct expenses. Other direct expenses, guys, 30 lakh. So prime cost comes to be 7 crore 87 lakh 10,000. Guys, here please be careful. 30 lakh is directly given, na? Is it given directly? Yes. So it is given as a lump sum, sir. Yes, but still, as it is used in production, guys, consider that it is paid based on what? Number of units produced. AMC cost of CCTV installed at factory. How much? 18,000. What is this? Factory overhead. Only one item. Okay. What is your cost of production or cost of goods sold? Or even factory cost? Everything is one and the same here. 7 crore 87 lakh 28,000. Okay, sir. Because in between nothing else is there. No opening stock of finished goods, no closing stock of finished goods also. Now, administrative overhead, considered to be general. Considered to be general. Just give a note. Hiring charges per cars, reimbursement of diesel cost comes to 88,000. 5% of that is tax, on which no credit, so add it. Comes to 92,400. Maintenance cost for weighing bridge. AMC cost of CCTV installed at Bay Bridge. TADA and hotel bills of sales manager, selling overhead. So this two you can consider as distribution, this as sales, and this as administration. They have not given the breakup because this MCQ. Now, simply add stay. Clear? Yes, but I am just telling you for your better understanding. This is administration general. This is distribution. This is selling overhead. Selling overhead. Cost of sales will derive. Okay, that's all. That's the end here. Cost of sales 7 crore 88 lakh 76,400. Any doubt? Understood everything now? Yes, sir. Now let us try to fill the gap, whatever they asked. Okay, prime cost is asked, first one. Prime cost is how much, guys? 7 lakh 87,000 10,000. 7 lakh 80, sorry, 7 crore 87 lakh 10,000. Guys, one more thing important. Please be careful, you might get confused with this. As it is related to production, it is considered to be a part of prime cost. Direct expenses. Okay, so 787 100. Okay. So let me just check the option. Sorry, 10,000. 7 crore 87 lakh. Seven crore 87 lakh 10,000. Okay. Next one. What is the total and per shift cost of production for last month? For last month. So first we know cost of production. Yes. Calculate the number of shifts. Number of shift guys. Oh. Yeah. Man shift how much guys? See. Totally how many days is operating days? 26. How many workers are there? 1000 multiply. 46,800 total man shift. Correct. Now each of the workers will be working for 8 hours there. How many days totally? 26. Should we multiply 8 also here? No, no. One shift 8 hours. Don't bring 8 hours here. Clear? So if I ask you what is the total shift, it is 26 into 1800. How guys? Simple. Each day what is the working hours? 8 hours. One shift. Clear? How many workers are there? 1800. So all of them will work. Yes, for how many days? 26 days. So totally how many shifts? 46,800. Cost of production is how much? 7 crore 87 lakh 28,000 divided by number of shifts. Divided by number of shifts, guys. You will get cost of production per man shift 1682.22. It is there in the option? Yes. Or next, third one. Car hire charges including GST. How much is that? 92 some amount. 92 400. Is it there in the option? It should be there. It should be there. Fourth one. Selling and distribution cost includes the following. Selling and distribution both put together they have asked. 1, 2, 3. This 3. 12, 8 plus 36. Or else here only. 20 plus 36. 56. 56 guys. Last one. What they have asked? EMS means earnings per man shift and also OMS means output per man shift. We already calculated the man shifts. Yes. How much is this? 46,800. 46,800. Come on guys. Total employee benefits paid how much? Add up this two. Here only it is done. 7 crore 4 lakh 20,000. Including gratuity and leave encashment. Okay. 7 crore 4 lakh 20,000. For how much man shift? 46,800. Per man shift how much? 1504.70 per man shift. Okay. They have also asked output per man shift. What is the total units produced? They have given in the question. 2,34,000 ton. For how many shifts? 46,800. Divide each other. You will get 5 tons. 5 tons, guys. Is that clear? Any doubt? 2,34,000 is given in the question, guys. Earnings is from our workers' point of view. Totally, how much they earned? 7 crore 4,20,000. By working for how many shifts totally? 46,800. So per shift, how much? Per shift, how much? Then also output per man shift. Total output is 2 crore 34. Sorry, 2,34,000 tons divided by number of shifts. Number of shift. Guys, please be careful. They have asked per shift, not per hour. If they had asked per hour, then you would have taken 46,800 into 8. Into 8. Hope you understood. As a denominator. As a denominator. Yes, guys. Fine. This is all about the questions from ICI material.